Hey, it's Friday, end of the week. Thanks for joining me. End of a good week, a week when actually I totaled up all the pips that were on the table for the trades this week. It's actually come to 2,550. I didn't do all of the trades, I must admit, so I only made about 2,000 pips. I don't know about you, but to be fair, I would be surprised if you all sold the DAX, Nasdaq, Dow Jones, because that would have been quite risky to have all three trades on in the same direction. But anyway, a good week, and appreciate some of the feedback I got yesterday from you guys, from subscribers. That's always really helpful. Okay, so we've got some more trade levels up today. Of course, I'm not really going to trade. I'm going to close out my positions before the end of the day. I don't want to risk losing any money today. We have just hit the sell level in gold at 1935.40. I think 1935 is the high overnight. You're probably asleep, so you probably haven't managed to catch that trade. But let's see if that one holds again today. Euro-yen trades worked well yesterday. The 134.5 level was the low, so a good bounce off there. We're now hitting the euro US dollar support level at around 108.5, 108.00. Canadian dollar, perfect. The longs at 124.40.10 worked on the run up as far as 125.90, 126.10. That's my sell level. That's the high for yesterday. Bang on the high for yesterday, 126.11. So ample opportunity to get into a short position there. Dollar CAD, New Zealand dollar versus the Canadian has that trade has worked, but I've left it on there today because I would execute that trade again if we get there, but I don't think we will. Nasdaq, we held a few pips, I think, below the 14,350, 400 resistance level yesterday, so that certainly worked. I personally think that stocks will move to the downside into next week. The E-mini S&P also saw a high for the day exactly at 45.10, 45.20 yesterday, so you're probably in a short position on that one as well. I don't think we had one or two trades that didn't work, I think, but so many trades worked this week. Anyway, as I say, up to 2,500 pips on the table this week. Now, I had a question. How do I execute trades that are on your spreadsheet? So, okay, let me drill down into that. My way of entering trades is to average. I don't know the exact price at which the market will bounce off a support or reverse from a resistance level. But I mean, as you know, I do get the levels pretty accurate the vast majority of the time. So you'll see that I usually have a 10, sometimes 20, sometimes even 30 pip spread for you to use to enter the trade. Now, the 30 pip spreads will tend to be taken from the weekly levels because, of course, there's a much greater margin of error for the levels I use on the weekly chart. The ones with the 20 pip range are probably levels from a daily chart, which still have a decent margin of error. So I have to incorporate that into the trade idea. And the ones with maybe 10 pips 10 pip spread will be ones that are probably from the 1 hour or the 4 hour chart, and then I will use the stop loss accordingly. So for example, the euro US dollar trade has got quite a wide stop. I mean, getting in from 108.50 down to 108.20 with a stop below 107.80 is a wider stop than I would usually put in, but that's because it is a 5-year trend line on the weekly chart, so the margin of error is quite big. Now, what I would do, or what I do is put an order in. Say I want to buy, I want to trade £5 per point, or I want to trade 5 contracts for my order. I will dot those buy orders through the range from 108.50 down to 108.20. So I might have one at 108.50, 108.40, 108.30, 108.20, something like that, and another one somewhere dotted around. Just what I'm trying to do is make sure that I give myself the best opportunity to try and get at least some of the position on, even if the market does not trade all the way down to 108.20. At least if it gets to 108.30, I might be able to get 2 or 3 orders on. And if I don't get the whole lot, well, that's a shame. But it does give me the opportunity to still make a profit on the trade. So I scale in. It's called scaling in. And I often scale out as well because the emotions that you go through when you've got a winning trade on, you're desperate, not to give back the profit. So, but rather than exit all at one price, I like to scale out. So, around my targets, I'll dot the the exit orders, so that as we start to enter the target area, I will start selling out of the position or buying back the short position. And it kind of satisfies that urge to bag some profit, but you don't bag the profit all at one pip. and and then miss out on the opportunity of maybe making a little bit more profit if the market continues in the direction in which it's supposed to. So that's what I suggest: scaling in, scaling out. It just sort of makes sure that you do get at least some of the order executed on the entry, and it also satisfies that desire to take profit, but without missing out on running the trade. I think one of the big problems that speaking to my subscribers is running trades. They take profit. We all have been in that situation where we take profits too quickly, and hopefully scaling out will help you to learn to run trades longer. Okay, that's it for today. I'm not going to run through the analysis because all the trades are pretty much the same as they were for the last 2 days. We're ranging, so you kind of know where we are with that. I hope you've had a good week. I hope that helps. Obviously, always do welcome your comments and questions. Have a great weekend. We'll start again on Monday.